Taxes can be intimidating, a source of stress and confusion for many. The world of tax codes and regulations can seem like a maze, filled with complexities and hidden pitfalls, but understanding tax write-offs can save you real money. It's about taking control of your finances and making informed decisions that benefit your bottom line. Think of it as unlocking a secret weapon in your financial arsenal. A tax write-off, or deduction, is simply an expense you subtract from your income, reducing the amount that is subject to taxation. It's a way of recognizing that not all the money you earn is pure profit, lowering your taxable amount. This ultimately translates to paying less in taxes, freeing up more capital for other ventures. The government only taxes your profit, the actual earnings you've made after accounting for your expenses, not all the money you bring in. Your gross income is just the starting point. It's what you're left with after deductions that truly matters. Business expenses aren't profit, they are the costs incurred in the process of generating that income, so you get to deduct them, legally. It's not about finding loopholes, but about accurately reflecting your true profitability. Every pound you write off is a pound you keep. It's a direct reduction in your tax liability, putting more money back in your pocket. This isn't about loopholes. It's not about trying to cheat the system or find ways to avoid paying your fair share. It's about using the rules to your advantage, understanding the tax code, and applying it correctly to your specific situation. The IRS set up these deductions because it costs money to make money. They recognize that businesses and individuals incur expenses in the pursuit of income. Claiming all your eligible deductions is just following the system. It's about accurately reporting your financial activity and taking advantage of the tax benefits that are rightfully yours. For small businesses and freelancers, who often operate on tight margins, this can make a big difference. It can be the difference between struggling to stay afloat and thriving in a competitive market. For example, if you earn £50,000 and have £10,000 in business expenses, legitimate costs associated with running your business, you only pay tax on £40,000. This significantly reduces your tax burden. That could save you thousands depending on your tax bracket and other factors. Money you can reinvest or save, fueling future growth and financial security. Tax write-offs are for everyone, from freelancers and small business owners to larger corporations, not just big companies. The principles apply regardless of the size or structure of your business. The more you know about what counts as a business expense, the various categories and specific rules, the better you can plan and save. Knowledge is power when it comes to tax optimization. This is a year-round habit, a continuous process of tracking expenses and planning for tax season, not just something to think about at tax time. Proactive planning can save you time, stress, and money in the long run. Let's break down the most common write-offs for people who work from home, a growing segment of the workforce. Rent, or the portion of your rent that corresponds to your home office space. Phone, specifically the business use of your phone, and internet. These are essential expenses for remote work and are often deductible. Who can claim these deductions? It's a common question, and understanding the answer is crucial for anyone looking to minimize their tax burden. If you work for yourself, freelancer, whether you're writing code, designing websites, or offering consulting services, contractor perhaps in construction, landscaping, or any other trade where you're hired for specific projects, gig worker, driving for a rideshare company, delivering food, or offering your skills on various online platforms, or small business owner, running a boutique, a coffee shop, or any other venture. These write-offs are for you. They're designed to help you manage the costs of running your own operation. The IRS considers you a business even if it's just you, so your costs are potentially deductible. This can include everything from office supplies to travel expenses, depending on the specifics of your business. Regular employees with a W-2, those who work for a company in a traditional employment setup, generally can't deduct home office expenses or other business-related costs, even if they work remotely. Their employer typically covers these expenses. If you're self-employed, however, the situation is different. You pay for your own office, equipment, and phone, all the things a company would normally provide, so the government lets you deduct those costs. It's a way to level the playing field. This applies whether you're full-time or part-time, whether you dedicate all your working hours to your business, or just a few hours a week, as long as you're earning self-employment income. The amount of time you dedicate doesn't matter as much as the fact that you're actively running a business. If you get a 1099 NEC, which reports for non-employee compensation, or run your own business as a sole proprietor, the simplest form of business ownership, partner in a business partnership or LLC, a limited liability company, you're eligible. But there are some important caveats to keep in mind. The key is having a genuine business purpose, a real intention to create a viable business, and intent to make a profit. It's not enough to simply call something a business. You can't just call a hobby a business for deductions. The IRS has rules to separate hobbies from real businesses, to prevent people from abusing the system, so treat your work professionally. Keep good records, and operate with the intention of generating income. Know your status, understand how the IRS classifies your business, and claim only what you're entitled to. This will help you stay on the right side of the law and maximize your tax savings. The home office deduction is a major write-off, but you need to follow two IRS rules: exclusive use and regular use. Exclusive use means a specific area of your home is used only for business. No personal activities allowed. It doesn't have to be a whole room. A dedicated corner works if it's only for work. Regular use means you use this space consistently for business, not just occasionally. It should be your main place for managing your business. Once you qualify, measure your office space and divide by your home's total square footage. For example, if your office is 150 square feet and your home is 1,500 square feet, your business use is 10%. You can then deduct 10% of eligible home expenses like rent, utilities, and insurance. Be precise and keep records to back up your claim. This deduction can add up to real savings. Your phone and internet are essential business tools, but you can only deduct the business use portion. Figure out what percentage of your phone and internet use is for work. Be realistic and document your method. For example, if 40% of your phone use is business-related, you can deduct 40% of your bill. The same goes for internet. Estimate the work-related portion and deduct that. If you have a dedicated business phone line, you can deduct 100% of its cost. The first landline to your home isn't deductible, but a second line for business is. Keep clear records to support your percentages. There are two ways to claim the home office deduction: the simplified method and the actual expense method. The simplified method lets you deduct $5 per square foot of your office, up to 300 square feet. The actual expense method requires you to calculate your business use percentage and apply it to your total home expenses. Add up rent, utilities, insurance, and repairs, then multiply by your business use percentage. Keep detailed records for whichever method you choose. To claim these, use Schedule C, Form 1040, for your business income and expenses. Home office expenses go on a specific line, and you'll need Form 8829 for the actual expense method. Phone and internet deductions go under utilities or other expenses on Schedule C. Only claim the business use portion you calculated. Tax software can help you fill out the forms correctly. Accuracy is key. Double-check your numbers and documentation. Let's see how this all translates into real-world scenarios. We've discussed the principles, but seeing them in action can really solidify your understanding. Let's consider Alex, a freelance web developer who works diligently from his home. He's trying to figure out the best way to calculate his home office deduction. Alex uses a dedicated 100 square feet office space within his 1,000 square feet flat. This means his office occupies 10% of his home's total area, a crucial figure for calculating his deduction. His annual rent amounts to £18,000, and his total utility bills for the year come to £1,200. These are significant expenses that can contribute to his deduction. Using the actual expense method, he can deduct 10% of these costs, which translates to £1,800 for rent and £120 for utilities. These deductions can significantly lower his taxable income. Alex also pays £600 annually for his internet service, a necessity for his web development work. He accurately deducts 10% of this cost, amounting to £60, as part of his home office expenses. When it comes to his mobile phone, which costs him £840 per year, Alex carefully estimates that he uses it 60% for business-related activities. Therefore, he can deduct £504. This highlights the importance of accurately tracking business use. Now let's look at Maria, a part-time designer who works from a cozy corner of her apartment. Her setup is a 60 square feet space. Maria opts for the simplified method for calculating her home office deduction. Using this approach, she multiplies her office's square footage, 60 square feet, by a prescribed rate of $5, resulting in a $300 deduction. A key advantage of the simplified method is that Maria doesn't need to track her actual utility expenses, making her record-keeping much simpler and less time-consuming. Maria's phone bill totals £600 annually. She estimates that she uses her phone for business purposes about 30% of the time, allowing her to deduct £180. Ultimately, the method you choose should align with your specific financial situation and your comfort level with record-keeping. There's no one-size-fits-all answer. It's crucial to be honest and realistic when determining the percentage of your home used for business and to report these figures accurately on your tax return. If you have significant home office expenses, the actual expense method might yield a larger deduction. However, for smaller operations with minimal expenses, the simplified method can be a more practical and efficient choice. The most important thing is to carefully assess your individual circumstances and choose the method that best suits your needs and maximizes your eligible deduction. Regardless of the method you choose, it's essential to maintain thorough and organized documentation to support all of your deduction claims in case of an audit. The most important rule: keep excellent records. The IRS requires proof of your income and expenses, especially if you're audited. Good records make audits less stressful and help you run your business better. For home office deductions, keep your lease or mortgage statements, utility bills, and a floor plan with office measurements. Take photos of your workspace each year. For the actual expense method, keep every receipt. For the simplified method, document your office size. For phone and internet, keep bills and notes on business use. Use folders or digital apps to organize everything. Consistency is key. Track expenses all year, not just at tax time. Well-kept records protect you and make tax season easier. Avoid common mistakes with tax deductions. Don't overestimate business use. Be honest and able to prove your numbers. Never double dip if you include internet in your home office deduction. Don't deduct it separately. The same goes for rent and utilities. Don't claim them twice. Keep business and personal expenses separate whenever possible. A dedicated business phone line or bank account makes tracking easier and cleaner. Remember, a £100 deduction doesn't mean £100 back. It just reduces your taxable income. Your actual savings depend on your tax bracket. Deductions are valuable, but not free money. The goal is to accurately report your business costs and pay the right amount of tax. Stay organized, be conservative, and you'll avoid trouble. If in doubt, check the rules or ask a professional. Smart, honest deductions help your business grow. To wrap up, always be honest and accurate with your deductions. The tax system relies on your integrity, but audits do happen. Be ready to explain and document every claim. Tax laws change, so check irs.gov for updates each year. Don't hesitate to consult a tax professional if you're unsure. Personalized advice can save you money and stress. Their fee is often deductible too. Start tracking expenses from day one, not just at tax time. Make record-keeping a habit, and tax season will be much easier. Master these basics, and you'll keep more of what you earn.